Yeah, so Jason, there's a lot going on right now in the Middle East with just Middle Eastern conflicts taking place between Israel and the Hamas. And obviously, we've seen come out over the last few weeks, Finizen trying to use this to their advantage to regulate cryptocurrencies and virtual currency as a whole. What are your thoughts on Finizen's approach to this regulation? Is this good or bad for Bitcoin, especially in a time where everybody has got this hopium in the markets? They're seeing these green candlesticks. What does this look like for the crypto markets moving into the next few months?
Well, so I think if we take a step back for a second and recognize we can't really gloss over like how the last few weeks have changed so much. And so we talk about like, is this good policy? Should we be doing this thing? Should we not be doing this thing? It's sort of like, because it's the way it was decided at the executive level, like with, Secretary Yellen, I'm either going to do it, I'm going to pull the switch or not. And so I think there's a danger when we have to create policy at a time when we feel like we're at our maybe most down because of another issue, just sort of similar to 9/11.
Yeah, I mean, definitely. That's very much fair. With this Elizabeth Warren specifically, there's been a lot of bills being pushed through Congress right now, at least trying to get through the House. Nothing's necessarily been completely established other than letters that the OCC has kind of implemented for strategy purposes over the last few years. But what are your thoughts on the bills that are pushing through our House committees right now? Do you see anything? Is there anything that's like grabbing your attention in terms of this is good for us, or are they trying to just come in and wreck DeFi and crypto as a whole?
Well, so I think a positive note on the House side that was reflected in the Senate side was a bill called the your keys, your coin type bill that avoids custody by any federal agency. And I think that's important. That's really something that matters a lot. And so with where we are right now, there is probably and has been a long time an agenda to wreck DeFi, to clear it out. So it's not like it's a surprise that this is another possibility. I don't know that this is necessarily a DeFi moment as much as it's asking about our whole ecosystem and can we report the way as if you were the head of JP Morgan and me like Wells Fargo, can we just give them the information? Like there's still a huge learning curve that affects us as well through all of this.
Definitely. I think that's definitely here at Discover Crypto. I know you've been on a lot of shows advocating for that regulatory clarity. I actually just got back from a policy meeting with DeSantis last week. We were discussing the anti-CBD sales that they actually pushed through in Florida, which got adopted across the United States, luckily. They're starting to approach Bitcoin mining, anti-ESG, and all of that, of course, conflates. But for Finizen specifically, can you just give a broad overview for the viewers of what Finizen is and why this is important for the industry? Because I feel like in the crypto world, a lot of people, a lot of holders, a lot of investors like to kind of just try to separate themselves from the government, from the banking system. And, unfortunately, we're going to come in with regulators. They're going to try to regulate on-ramps and off-ramps. They're going to try to control stable coins or DeFi as a whole. And, so with Finizen, how are they doing that? Who are they? And why are they doing this approach?
Sure. So, I think it's important to understand the history of Finizen, and that Finizen started in about 1970. The original concept was the concern people had about the connection of using cash for drug money. And before you knew it, it was a big deal. I mean, you could have a treasury agent who could take away, a suitcase full of cash if they found a trace of cocaine on it from you. And that was sort of the way the government was so spooked by what was happening. And that was their reaction at the time to that form of money. You then, fast forward from the moment when, you had Finizen in 1970 to all of a sudden we now have the internet and different ways that they look to, regulate that from a financial crimes perspective. Where we are today with Finizen is it's an enforcement body that has a couple parts of its mission relating to the BSA and protection of not using bank money in the U.S., for other operations. So, for instance, during the Ukraine conflict, Finizen immediately sent out a note to all the banks, to be careful about money laundering. When we get to where we are here, the problem with the latest sort of, objective of this Finizen measure is that it could override or take on some of the bills, we were just talking about that we may like or not like in Congress, because then they just sort of get forced through on the administrative side. And that's what we really need to be cautious about at this point, is what direction are we going to see this approach if they actually say, hey, we now have to start getting all this recording information considering their money laundering concerns.
Yeah, it's funny that you brought up the cocaine part of the United States dollar. I think if you still trace it today, like 99% of your dollar bills have, whether it is cocaine or even I think human feces on the dollar bill. They're like the nastiest, dirtiest thing you could possibly ever hold. So seriously, never let your kids put change in their mouth. That is like one of the worst things you can do for your dental, just for as you grow up and just in general. But you can't do that with Bitcoin, luckily. I don't know if you want to put a hard drive into your mouth, like as a ledger. It's not gonna be fun to chew on. Yeah, yeah, that'd be terrible. But you just mentioned actually to me before we hopped on here that you actually joined as an advisor to a Bitcoin Policy Institute. So you brought up a really good point. Between FinCEN and all of our financial regulators, what it's the SEC, it's the CFTC, it's FinCEN, it's the OCC. How do we navigate and approach these policy concerns as it's kind of regulation by enforcement and each policy-driven group is trying to get more control than the other while completely ignoring the retail audience, and it's ultimately going to end up hurting us. So what are you doing from a policy standpoint? Why did you join this board? And more importantly, how do we just stay ahead of being suppressed by these agencies?
Yeah, so the reason I joined it with the Bitcoin Policy Institute is it had a really good framework and thought about the issues that affect us from perspectives of human rights issues, the Bitcoin mining aspect of things and the ability of doing that kind of work and using the energy that you pay for, and then, from a national security perspective. And so what I like about that approach, and I think it's important to have voices like this in the ecosystem, is if you and I aren't talking about it, no one's talking about what's happening with FinCEN, with the way they have taken the concept of Bitcoin and virtual currencies and really sort of sunk their teeth into them in a way where they're saying, hey, this is operating like money and we have to be able to do what we need to regulate this ecosystem, but not really give guidance. And look, as an FDIC regulator during the financial crisis in 08 and 09 when Bitcoin was invented, I'll tell you, seeing the way bank exams go, the most important part of a bank exam is the safety and soundness. Meaning, if I come into your bank, I'm going to want to know, hey, can you operate the bank? Do you have enough money? Is everything good? That's number one. You're not making risky loans or whatever. Number two, what kind of compliance, operation are you going to have for your bank? And then that's the other main part of the exam. And then BSA would be like a day. It'd be a very small part of the exam. So we're talking about a very small slice of what's overall all the risks that could happen. Because in the world of banking, at least, there's always a risk to something that you do.
Definitely. And, I kind of actually want to get your thoughts. I know everybody listening is going to want to know, regional banks are struggling right now. There is, with higher interest rate based markets, we're seeing essentially an Operation Choke Point 2.0 hold take place where monopolies are just running rampant through these markets. They love it. We just came off a third quarter GDP of, a 4.9% growth. And a lot of that was obviously value to the Magnificent Seven and that value to these institutions. So, moving into what could be a very rough soft landing, so to speak, is what the Feds have been trying to approach. How do you see this playing out as someone that has seen this behind the scenes, has seen the regulations, has seen the borrowing, the lending, all the protocols have been set up? What does the road ahead of us look like for regional banks?
Yeah, so this is a dangerous trend that I think really has been going on for years now, where our banking system is becoming larger and larger, made up of JP Morgan, Wells Fargo, and everything else continues to get sort of swallowed up by them, because what you have there is you have an issue of really the marketing brand and the affinity name, and the fact that when during the financial crisis, Wells Fargo didn't really want their bailout money, but they took it along with every other bank because it had to be shown in solidarity for all the banks that no one would think, oh, we got to pull all of our money out of and go to one of the large banks that's safer or not safer. The problem now, I think, that's scary is the regional banks offer a really important service, and I think can down the road offer important services like cryptocurrency custody and things like that, and they're really not able to compete because of these larger banks. And you're seeing what's really an irrational decision, right, of moving your money from one bank to another where you still have $250,000 of FDIC insurance, but you're afraid that you might lose that, so it's worth it for you to make that change.
Yeah, there's definitely a lot of fear coming from the sides of, you have the whole topic of de-dollarization now, BRICS using alternative currencies. But it's very interesting that you're coming from that perspective. I just watched a Dave Ramsey video of him saying, Bitcoin is going to go to zero. It's a nothing burger. It's, money laundering, etc. It's a scam. It's a Ponzi. This seems, and a lot of millennials, Gen Z, and of course, a lot of institutions now are starting to realize that, hey, there is a lot more merit to this ecosystem. Since the 1970s, ever since we came off the gold standard, we've seen inflation run rampant. We've seen the wage versus prosperity gap grow. And I think it was just last week or 2 weeks ago, we saw one of the largest oil providers in the world purchase another acquisition for a $60 billion company that would further centralize even that industry. So whether it's pharmaceuticals, it's the banking sector, it's insurance, everything is starting to become more and more centralized. And it's hurting the little guys, it's hurting the middle class, it's hurting poverty. So, you run in the company now and you left FDIC, was this like early 2000s? When did you leave that, and what was the acquisition that you made out of that?
Yeah, so I left the FDIC and I went to work for Obama's Making Home Affordable program in 2015. And since 2016, I was doing a lot of advisory work with my company at the different banks and regulators, but I came across Bitcoin. I got introduced to what was happening all the way back in 16. I've been part of this policy sort of, view ever since. And it's great. I like it because it's the same perspective I had during sort of the financial crisis, looking at all the large banks, being able to sort of see everything and understand it and try to piece it together.
So do you see us approaching a larger financial crash in the coming years or decade that would be as significant as something we saw in 2008? And also a side note on that, if you could please go back to the administration, because housing is just getting incredibly uncostly. So someone that has just I have now enough credit, it'd be really nice to see that affordable housing come back into play. But yeah, do you see a really big downside to the financial markets coming in the following years?
Yeah, and that's the most important question I think of all, because we've had in 2008 we saw this crisis, and we've had these very low interest rates for such a long period of time. Now we're finally starting to pick it up again. I mean, if you look at the Great Depression, it took how long the Dow got to be back to its value. It was a really long period of years. So the question is, are we coming out of this and we're going to experience an aftershock from what we had to do, right? Well, have to, but survive our banking system by keeping these 0% ridiculously risk-free, money for the banks, and that's going away. That's why there's the pains now in the housing market. That's why we're now shifting into this new environment that we're facing. And, supposedly the Fed's, cooling off, not going to, raise any more rates for a while. But there's still a lot of banks out there. We just don't know. What we learned, obviously, earlier this year is we know one bank, Silicon Valley Bank, that didn't manage this correctly. But are all the banks really on their balance sheets managed in a way where they don't have all these paper losses, and it puts them at a critical point?
Yeah, which, coming directly from the FDIC, Silicon Valley Bank got bailed out of deposits well over $250,000. And now we're seeing, fast forward a year, Janet Yellen trying to borrow nearly $1 trillion to pay for whether it's foreign conflicts in the Middle East or, whatever lending or whatever interest, I guess you'd say, we own upon these debts. It's going to be like $1.25 trillion this year coming up. So how did the FDIC get around this, and how are they able to kick that can further down the road, and how far can they kick this can down the road? Because it feels like they've been kicking it for years. We've watched, I watched my parents do it, they watched their parents do it, they watched their parents do it. This has been happening since the Federal Reserve was instated. So, when is that going to end, and what do we look for to kind of, what are the signs or indications that it is coming to an end?
So the one thing I really hope that we have happen at some point is some real examination into these larger, at the FDIC, the larger banks, and sort of get a good understanding of what they're, up against. But yeah, we just don't know if we're going to have a reverberation of that, right? And that's what we need to understand. That's why there are these pains in the housing market and where we are from an interest rate perspective. And at some point or another, we talk about what the Federal Reserve's mission is and how that's changed over the last 40, 50 years. It used to be unemployment. It's now, unemployment and inflation. And now we're saying it's like unemployment and inflation and equity. And at some point we have to think of how far are we going to stretch the mission of one organization that we need to be figuring out what the right moves are with trying to control what will be just a reverberation of what we saw in 2008 if we're not careful.
Yeah, it amazes me, especially with Michael Barr right now trying to really progress towards a way where the Federal Reserve has control over private money, specifically control over stable coins. It's like another body trying to come in here and start to actually have that regulatory oversight, which, unfortunately, we've seen letters pass through the Office of Comptroller of Currency, I think all the way back to 2014. That was already, as we were all these talks of anti-CBDC bills, we can't have this happen. They were embedding these laws that would allow them to pursue regulations at least or take it to court. And we're now starting to see that ramp up more and more. And it just seems like it's almost like the NFL. There's 30 different teams right now trying to approach the regulation, and it's like just pulling us in one way or another. At the same time, we're dealing with this, collapse potentially of a financial sector, in the United States, and that doesn't even go for what's happening in China with their real estate sector as the second largest GDP. So you're in Value Technology now, correct? Is this going to be your company as CEO?
Yeah, Value Technology Foundation. It's a 501c3 nonprofit. Think of us kind of like the RAND Corporation or, that sort of, but specifically for this space, evaluating digital assets, the technologies in a way. And we already do some work for a couple of government agencies and supporting them to understand what all of this is and how it works.
That's awesome. When did you guys find that? Or when was it founded? Sorry.
I founded it in 2019, right after I had left. I was working at Consensus for Joe Lubin at Ethereum, and then I left him after a year, and then I ended up, creating my own. I do my own consulting work for folks too, but primarily this, Value Technology Foundation. I want to build out and sort of examine all the different and provide it in a broker, there's no bias here to what I'm showing to you when I go to the different government agencies.
Definitely. No, definitely. Working for Joseph Lubin, that's huge. Were you there part of the JP Morgan acquisition? I think we're looking at 2018, 2019. Might have been 2020.
Yeah, I was before that. So I was there from 17 to 18. So I was there for sort of as we saw the ICO boom and we're trying to figure out utility tokens and everything else and understanding that. I was his sort of first policy ambassador for the Ethereum, networks in both in DC and across the US. And then, did that for about a year and then just wanted to focus in sort of this direction. Because I think it's important to have an opportunity to explain to our regulators and administrators like how this all works, because the less guesswork there is in their minds, the less chance they'll make bad policy, so we can get them comfortable with the technology, just get them to play around with it, just like if someone's not familiar with an iPhone, it's that same thing, and then they'll have that comfort and understand better what they should be doing from a policy perspective as well.
Definitely, especially as we approach hopefully one of the greatest seasons that we'll see. But we got Bitcoin spot ETFs, we got Ethereum now, rumors of an Ethereum spot ETF with the Delaware Trust Fund coming from BlackRock. What are your thoughts and outlook on these ETFs? Do you expect these to be actually approved at their proper timing in January or March? Or is there a potential that we could see them actually just not approve these at all and do what every other regulatory body has been doing and just force these companies to court?
Yeah, well, it's funny because they've already been to court with the Grayscale ETF, right? I think that there's going to have to be a little bit of honesty and reckoning, when it comes to, figuring out all of this until we can have the right kind of conversations with people, and it's in a way that's not, threatening, and it can be, from a good place of learning. And I think that's really where this technology at this point really needs a break in Washington, D.C. So I've been through a lot of the policy conversations and just allow us to breathe, allow us to start doing things, playing with things, breaking things. Because what I always say is if we're going to do that, well, we should be doing that here, not, in other countries. It just doesn't make sense. We should, even if you decide all this is really like a waste of time, fine, but invest the time to really understand what it is.
Yeah, it's definitely a great point. As we approach these election cycles coming up just a year from now, there's a lot of concern, like fire Gary Gensler, get rid of so-and-so, replace them with people like Hester Pierce. Are you worried at all that this next election cycle, depending on the presidency, that it is going to push this technology out no matter what we do? Or is there something as retailers or just people and advocates in the Web3 industry that we can be doing today to make sure that it isn't pushed out to other countries like China?
Yeah, I think talking across party lines, both Democrats and Republicans, sharing, what's important to you, why you think this technology needs to be here. Very often people don't realize with this type of advocacy that if you not sharing or talking about it, and that's the most important part about the ETF, right? Because if you can argue with the SEC and explain to them that this ETF is, for competition purposes, you could have the breaking point, the heartbreaking point, I think, for them is the idea that there's the Bitcoin ETF. It uses a lot of energy, and Biden's whole administration has been very, very climate focused, right? So maybe Gensler's been afraid to just say yes to an ETF because he doesn't want the wrath of Biden. But remember, in terms of election, Biden's running for re-election, right, in 2024. And Gensler's criticism outside of the crypto world has been sometimes he's not too business friendly, like kind of upsets all of Wall Street. So Gensler's going to have to make some kind of decisions as a regulator. What kind of future is he going to have going into the 24 Biden election if he's so anti-business and it just doesn't match up with what Biden's trying to do? then you might see some change. And I think that's really going to be critical. We've reached a point now where we just have entirely too much decision making by one person as a regulator for entire ecosystem. Whenever you have that, that's a problem.
Yeah, it's like musical chairs. Whoever's going to fall first, who's going to take over. We have no idea what this outlook looks like, which is leads right into the next question of what do you think crypto regulation looks like in the next 2 to 3 years, especially as we potentially enter this new significant bull run with the amount of capital, we're talking billions of capital inflow that can flood into this industry by institutions with the announcement and approval of a spot ETF.
Yeah, I think that the next 2 or 3 years are going to be focused a lot on the evolution of. I think we'll finally have ETFs, and we'll see how the market interacts with them. Questions about is the Bitcoin price, manipulated or not manipulated along those lines will kind of be satisfied for everybody. I think privacy is going to be a big deal over the next couple of years. We're going to kind of have a GDPR moment with the world of digital assets at some point as to how much information the government actually needs to know about us or should know about our finances. So I think you're going to see that really shape. And I think you'll also see an interesting sort of back and forth that we've seen for some time now between sort of the Federal Reserve and what they're saying is going to be, as you say, the soft landing, and sort of people in our community, they're like, well, maybe we could do it some way better. And sort of what that monetary policy debate is going to look like a couple of years from now. I mean, will they at some point acknowledge maybe we need a backup plan for the way we're doing our money today?
Yeah, definitely. It's approaching. We're in a world right now where you have multiple alternative currencies starting to prop up. I mean, you had the ACU in the 1970s when we first, came off that gold standard almost immediately. So it's not like India, Pakistan, or Iran have been, just sitting on the sidelines for years. Ever since we had that coup d'etat back in the 1950s, it's like we knew this is how it would approach. The United States took this control by force after the World War or post-war, and that's what led us to the oil embargoes. That's what led us to the valuation of the denominated dollars. So we're starting to see this retraction. We're starting to see the ties starting to break. You had El Salvador completely being bashed by the World Bank for adopting Bitcoin as a legal tender. You had Michael Saylor getting fudded by, I think, every single news outlet that exists out there and is now well over $1 billion in profit. Do you expect Bitcoin to kind of emerge as this asset class because of the decentralization and the uncontrollable focus a government can have on the industry start emerging more in second world and third world countries? Or do you look at as this something as BlackRock or these institutions are going to just come in and try to control instantly?
Yeah, I mean, I think that's where we are going to see this Bitcoin standard. And I think we've already started to see that in certain countries that are having a currency crisis, right? What's the one thing you always hear about the minute that there's a crisis is, is Bitcoin a way out, or how can I opt out of whatever, system is happening here? Look, I think if anything, we have to realize as a society, the amount of trust that we're giving to just a few select people sort of decide what the next outcomes are. But what I think that at the end of the day is that Bitcoin is very special. And I was at this one conference where someone was sort of saying, well, how do you really know what it is or how to buy it or all these questions? But you can always have questions about all those things, like why should you buy gold or whatever. But if you've been discerning enough and you think that that's the right type of digital asset, then that's the approach that you should take. So
yeah, no, I would have to definitely agree on that. So with the adoption and the emerging of Bitcoin as potentially a reserve status, what should users and these countries and anybody, just retailers in general, be doing with that Bitcoin? Should they be focusing on self-custody, or do you see us as someone that worked at the FTIC being able to trust banks with these assets, or being able to trust BlackRock, Vanguard, State Streets, Fidelities with our retirements and being able to store our Bitcoin for us? What is the outlook there, and what should we probably be looking to do?
I mean, that's such a great point, because the idea is what do we expect from our banks today, right? What do we expect them to do, and what do we expect them to help us with? Is it a good idea to put money in your mattress? Is it a good idea to just put it into a bond that doesn't earn any money? I mean, but at the end of the day, though, when you're talking about like this new type of asset, understand that the potential that it has and sort of the game-changing technologies that it can bring into the world, you're always going to experience problems when you're faced with whether, you're going to get approval for something or not. So
definitely. Yeah, I would have to say, get that crypto off exchanges. We've seen it with Voyager, Celsius, FTX, all of the collapses, which are primarily due to just overlending and doing what our fractional banking system does, which is you give the money and they actually don't store it for you. They just go spend it and put it into this money-making mechanism that just doesn't land. It's kind of, again, back to the musical chairs. You can keep going around until there's no more chairs to sit on, right? So, got to get that Bitcoin off these exchanges here. Yeah, so Jason, as the chairman and founder of Value Technology, how are you guys using DLT to spread it not only to other societies, but just enhance society as a whole? What is your vision with DLT for the future?
Well, I think right now what's important is some of the aspects that I've seen through Value Technology other countries and other industries look at, and that is looking at blockchain as a way of maybe for supply chain tracking for, let's say, dual-use weapons of mass destruction. Right? And how can you avoid China from increasing, its nuclear proliferation of weapons? So I think that that's an important, aspect of understanding, where we're coming from here. And I would say, too, that ultimately, going forward, what we look at for the next 3 to 5 years in this space, it's going to be really important to keep educating policymakers and keep educating regulators on exactly how this works, recognizing that there are real people in this space who are doing things with this technology. That's critical. The education can never be underestimated.
Definitely. And I've noticed you mentioned supply chain, which I think is one of probably the biggest use cases with logistics on a global scale, especially as we approach deglobalization in general. We need more efficiency. We need to integrate that blockchain and that AI to be able to track just for traceability and transparency reasons. But I've noticed you guys are actually partnered and closely working with Hedera Hashgraph, R3 Corda, IBM, of course, some of these heavy hitters, and I think Deloitte as well. I saw on your guys' webpage. You guys obviously are not Bitcoin maximalists, which I want to give a round of applause for that as well, which is amazing. As you guys approach this DLT, what are the biggest utilities you guys see in the crypto industry, in blockchain as a whole? Are you guys focusing specific on companies like Hedera, or is it anyone just in this broad aspect where it's anything in supply chain logistics that is just providing that use case?
It's anything in supply chains logistics, but specifically, we started out by talking to some folks in Congress, particularly Congressman Darren Soto, who helped us write the forward to a paper where we combined with Amazon, IBM, Deloitte, and other folks in the crypto ecosystem too, like Consensus and so on, to write this white paper that would help explain the potentials for blockchain technology could do from, supply chain perspective, variety of other different reasons. And then the biggest part of what we sort of worked on and prescribed for Congress to think about is if you could have some sort of a research and development center for all of this industry, for everyone to understand exactly how it works and take out some of that friction, that would be a critical thing to do as well. I think, one thing that's underestimated is the possibility of not having this here, right? Not having this here in the US. So we need to, take steps to make sure that we position ourselves that we can have this technology and benefit from it just the way we automatically assume and really do enjoy the internet today.
Yeah, it sounds like you kind of have some insights on the markets that are emerging outside of the United States. Do you see more, rising, I'd say, advancements in the southeastern, like Asian markets? Where are you guys closely working with, and how are you guys coordinating to understand that, yes, there is competition against the U.S.? Is this bullish for crypto? Is this bullish for blockchain? Or is this something that you're worried about that's going to cause discrepancies and kind of ripple effects into altcoins and these utility aspects of these projects in the future?
Yeah. So, I think that what's important is with the prospects for when you look at different countries is we had the India G20 presidency come in and say, you shouldn't ban this technology, but all the countries should be coordinating what they're doing together. And just right now, we don't quite have that. It's surprising when you think about the fact that you have, UK, Singapore, Hong Kong as all these potential next future places for the center of finance, and we don't have New York as part of that conversation.
Yeah, hopefully we'll start transitioning, progressing towards that. We're getting beat down right now by, it seems like, Hong Kong out of China. They're really starting to force, which this could be, I do want to get your thoughts on this, because this is also, there's no way our administration doesn't realize the emergence of this industry in China itself. They have the second largest GDP, obviously BRICS. They're massively kind of hounding down the US dollar as they bring on more members like Saudi Arabia, Egypt, etc., more than likely in January. Why are they pushing this out? Is it, by design, or is it just because of an economic incentive that's been established in the structure of our government over our years?
Yeah, I think that China's been dealing with this since like 2017. They've had their own research and development center. They've thought a lot about the technology. Obviously, critical differences there of the totalitarian regime. There's different uses, for that type of technology in that setting. But what's upsetting to me, and if you think about it, is even in Davos this last year, is this company Red Day Technology that was originally part of the Chinese government. It was acknowledged that that's what it was. They'd introduced the possibility of sort of a blockchain services network. So they advertised to get all these developers around the world working, for blockchain, and maybe they're in Singapore or wherever, but then they go on to the Chinese blockchain services network because they're offering low prices, low costs, come work with us, and don't realize what kind of setting, they're being, brought into. A lot of this is, understanding what the BSN is, what their forward-thinking position is on digital assets. We obviously see what they decided to do about Bitcoin, but I think there's also a lot of aspects of what they're trying to do with their CBDC, which now, at least in the US, is you almost can't say CBDC sometimes, right? Part of it is legislation saying anti-CBDC, so now we're sort of at a point where we're saying, society, we can't necessarily have a central bank digital currency, but what are the potential alternatives then? Or what are we looking at is the future of money over the next 5 to 10 years?
Yeah, which is quite conveniently stable coins being able to back themselves with US dollars, and people don't realize that that's farming that yield, which allows them to print more money. And it kind of turns into this second fractional banking system that allows these institutions now to continue to print more money. And that's kind of an outlook I've been worried about as we've watched this emerging industry is, great. Yeah, maybe we are disrupting the banking system and we're, eliminating that middleman, but we're still relying on these asset managers coming to this industry to bring that, that amount of capital we need to make this an asset and transition it really into commodity that's worth something such as gold. So it's no longer this volatile asset class. And with that outlook, you got to realize, okay, well, what does that mean? Like, who's controlling what on-ramps, regulations, who's lobbying? How are they going to approach this? Why would they even launch a product? How are they making money off that product? And it's a very good point that you're bringing to the table here. It's like, okay, well, what's the alternative? And in that case, I do think it's going to be, unfortunately, the rise of regulation around stablecoins. And I actually want to get your thoughts on, I don't know if you paid attention to the CME today. There was a huge announcement with open interest. We have in the United States now, through the Chicago Mercantile Exchange, that they have passed Binance now in the amount of open interest, which could very potentially mean we're setting ourselves up for more market manipulation in the future. And again, coming from the FTIC, we saw this in 2004 with the precious metals markets through the 1990s. Are you worried or expecting, or is it kind of just something everybody is just cool with nowadays, where we're like, oh yeah, the government takes our data. Oh yeah, Meta sells it off to the Chinese. Oh yeah, everything watches us now. We're going to be scanning our eyeballs for our information. Are you worried that we are approaching a market that's going to be massively manipulated in the coming months?
Well, I think the question is like, who has the ability to manipulate the markets, right? And the question is, like where we have markets now, I mean, it's quote unquote manipulated by the Fed and other regulators are trying to get it to a certain point. But the question, I think, is can we see this ecosystem exist in a way where we don't face those headwinds? And I think that the more that we get into, the finer granular aspects of the regulation, then that's when we'll really be able to see, I think, this ecosystem take off, because we're still trying to find that ground zero moment to sort of just show the use case, explain to the regulators and policymakers here where we are. What was crazy to me is that they just announced at the OCC this last week at DC FinTech Week that for AI, that the regulators could use AI. They could use ChatGPT according to policy, because they need to use it to understand how it might be affecting the market, And I mean, it was without hesitation that as regulators could use AI, but regulators have never been allowed to use crypto or blockchain, right? They can't even, the second it was AI, it's like, oh, that's a worthy technology. Let's let people, play with it in our agency. Yeah. But crypto is not something they let the kids play with. If you and I were regulators at a shop, we would learn it better if we could actually play with it a little bit. And so, I say that to say, of course, there's I'm sure a lot of reasons why they're worried why anyone would even own crypto from sort of the government, OPSEC perspective. But I think that we risk not understanding the technology for this exact issue and losing it.
Yeah, I think we've definitely seen that. We have people that have never even used this technology trying to regulate an emerging asset class that is completely different than the 1933 Securities Act, right? Like, this is something that there wasn't even internet or computers around for when this digital currency was emerging. And now we're accessing global markets and liquidity and illiquid assets 24/7 instantaneously all over it's just something that does need that change, but we just got to be very, very careful for how we approach it. But I think the biggest takeaway from all this is we have someone that worked formerly at the FDIC. You're very bullish about Bitcoin, very bullish about blockchain technology as a whole. What are you expecting from, the outlook for this next 2 to 3 years? Are you expecting us to see, a lot of good price action coming to this market, just kind of bring some life back to the conversation? I know we've been a little bit more dull on the regulation aspect of this and the control, but it does sound like you're very excited for Bitcoin in general.
Yeah, I mean, what I learned in '08 and '09 as a regulator was the fact that how fragile our ecosystem is. And what I really thought about it as a regulator at the time is, we have to really defend what FDIC deposit insurance is. Because the minute people stop believing that concept of FDIC insurance, there isn't enough money to be printed to go around to pay everybody, right, in the overall system. That's one of the consequences of your fractionalized banking, setups. But at the end of the day, I think that understanding how this asset is going to change the world of banking, how people do things. Like with distributed ledger technology, I'm very hopeful because I see this as a trust engine, right? And a lot of regulators have kind of given up on that notion, but I feel like we didn't have a trust engine in 2008, 2009, except for showing a symbol that says FDIC insurance. And I think we can figure out maybe something like at a next evolution model for our next generation, how this is going to work in a way that really, helps explain, what we should and shouldn't be doing with our money.
Well, Jason, it's been an absolute pleasure having you here today. I'm super excited to be able to take Discover Crypto on this new journey where we start talking and discussing Web3 policies, the future of regulations in these markets, how macroeconomics can impact whether it's the commodities market or Bitcoin as a whole. But where can the audience find you? I would love to have you come out here soon. We have the Bitcoin Policy Institute. We have Value, your Value company. Where can they find you, and what should they be looking for next?
Sure. So you can just follow me or DM me on X at Regulatory Jason. That's really the easiest way, or visit me and email us at www.valuetechnology.org. I'm really proud of sort of Value Technology in terms of the things we're trying to build on. And right now, we're really specifically looking for some people who might be interested in doing a research project around all the different, technologies that exist, and comparing that and contrasting that to some of the regulatory headwinds, to help our policymakers make the right decisions for this industry going forward.
Well, Jason, hopefully I'll see you at Capitol Hill this year. All right. And until next time, guys, we'll see you on Discover Crypto.